Hello and welcome to today's Hawkeye market update. My name is Randy Lindsay. Today is September the 17th, and I wanted to bring you up to date on the crisis in the oil markets. As you already know, there was a drone strike that struck Saudi Arabia over the weekend, and it forced the country to cut its oil production in half. And the implications on that are astounding. We talked about that a little bit yesterday, but today I wanted to show you that the potential and the implications of where oil could go and other markets that you might want to be looking at. Right now, you can see that the spike in oil has pushed prices back up into the $63 area, and it looks like it's stabilized. If we put our zones on the charts, then you can see that that was the first hurdle. The first area of major resistance was up around 63.64, which is exactly where price went. The next major hurdle would probably be back to the April highs of around $67. But let's look into see why. I've read several reports that Saudi officials and U.S. officials have promised to fill the gap on the supply of oil by using strategic reserves. While this looks like it could be easing the price of oil, there's still a big potential for oil to remain at least $3 to $5 higher, if not $10 higher from its original 56 level. So looking at a 59 to 64 level might be the new range that oil might be settling in. Of course, if that doesn't pan out, and within 48 hours we don't resume supply, there's a really good chance that oil could continue to go up. So let's look at the bigger picture just to see. You see back in April, the highs of oil were around 67. And then you can see back at October of last year, the highs were around 78. So you can see that those are the two values, the ceilings that we're looking at trying to get the price of oil back to, and putting the zones back on again, validate that. There will be a couple of stopping points on the way where you can see some stair-stepped or markdown regions that occurred during the price hike. But these are going to be stepping stones on its way back up to this level if we can't get the supply under control and back in line. Another thing I wanted to point out was that with that potential continued upside, there are other implications as well. Because of the attack, there were questions brought up about defense and about potential threats of continued attacks from other countries that have been named. I took a look at a lot of the defense sector. So some ETFs that cover the defense sector are the XAR. You can see the S&P Spiders S&P Aero Defense sector has been in a really nice bull run for quite some time. I've had my eye on this particular ETF for a while since I did several scans, and back in May and June I got a couple of really nice signals for looking at this. It's a really nice bullish trend coming up into that, but you can see just recently and as of this weekend, you can see that it has rallied considerably since then. Some of the major holdings of that are these stocks that are listed right here that are in the aerospace and defense sector. So those are the ones that are the major holdings of some of these defense ETFs. So those are ones to definitely be looking at. Also, if you are looking at other energy or oil ETFs, then the leveraged or unleveraged ones, DIG if you're long-term bullish, or DUG if you're long-term bearish. You're looking for these as up and down type moves. Right now, DIG is the one to be looking at because it's the positive non-short version, while DUG is the ultra short version. The ERX is a 3x bullish energy fund, which has some potential, but because it's leveraged, use caution and make sure that you're only trading that during the day. And the XLE. The XLE is the an energy spider. It's another good sector to be looking at specific to that. The UCO also is the Bloomberg Crude Oil shares. So looking at these are ones which are I would definitely pay attention to. And of course, if you have a copy of Hawkeye software, you can do the exact same analysis that we teach in all of our live training rooms every Wednesday. So click the link on the page, get your copy of the Hawkeye software for a nice trial period. And also make sure you download our copy of our free ebook on how volume makes a big difference in trading these markets. Thank you for your time.